Louise, pleasure seeing you again as well. We might kick off with introductions while we wait a couple more minutes. But as I was saying, this first session tends to be the smallest of the sessions. This is the second time we're running this sequence of webinars for mandatory reporting. When we go into the first core pillar, which is going to be governance, in 2 weeks' time, we might move into more like a panelist webinar style because we get more people coming in, and like with microphones popping in and out, it becomes a bit harder to manage. So while you can, feel free to mute yourself, but if you have any questions, jump on the chat. If you're having lunch, that's fine. Put it via text or unmute yourself. So I'm Afonso. I'm one of the co-founders of NetNada. And this is Maka, which also has a camera off. Maka joined us from the University of Sydney. She's from Argentina. Maybe Maka can give a bit of background about what you did at university and how you're helping clients nowadays.
Yeah, for sure. So I did my research with NetNada around AASB S2, climate mandatory reporting, which we'll dive into. And afterwards, if anyone wants to have a look at the final report, I know Afonso is going to mention it anyways. I finished that and I jumped into working full-time with NetNada as a sustainability consultant. And I'm working closely with all the clients that we have on the customer success side of things.
Perfect. And everyone knows me a little bit, but as a background, I'm an environmental engineer. I actually studied under the researcher who kind of published the paper of what is carbon accounting to a sense here in Australia, and the ones leading the creation of spend-based emission factors for Asia Pacific, but kind of worldwide, in a collaboration between UNSW and USEED in something called the EE Lab. And like I mentioned, we support a lot of Group 1, 2, and 3 companies. And early this year, we've ran this session that was very successful, over 5 webinars. We're now doing it again to kind of upskill as many people as we can. So to kick off, and before I jump into the presentation, if you have any questions, let me know. But I want to just start with a simple poll to understand if you are on the consulting side or in the reporting company side. Of course, I know most of you, so I have a bit of context, but if you just want to pop it in and ask those questions, that will be brilliant, or answer those questions. Fantastic. We kind of have a 50-50 split, or 60-40, which is fantastic. So I'll kind of speak on both sides. The pain points are still the same. Doesn't matter if you're helping externally or you're trying to help internally as your internal stakeholder. The challenges that you need to uncover are very similar, because even if you are hired as an external consultant, you need to get those stakeholders involved, win approvals, and so forth. So thank you so much for answering that poll. And I'm going to jump into presenting the slides and talk a bit about the series, what we're going to cover today. This session aims to be a bit shorter than the other ones because there's not as much content to cover, and then we'll deep dive into the heavy stuff. All right, so just sharing on my screen. I'm just going to go in here. If you have any questions at any point, please let me know. I'm just going to go and make this in presenter mode. Can everyone see my screen?
Yeah, it's working.
All right. So the first thing I want to cover is that this first session talks about getting ready. So as a company, you can use these assessments to kind of give you a snapshot on where you are in related to climate compliance. As a consultant, this is something that you can use to give value for free or to start a conversation. So it's really, really valuable tool to have at your disposal. It's easier to complete. And depending which stakeholders are involved, it can get more accurate or less accurate. If you haven't yet, but if you have received invitations for all the sessions, a session will happen every 2 weeks until we get to session 5. And at that point in time, we might try to do an in-person event as well. Chat box, Q&As, or raise your hand if you actually want to speak up. Feel free to ask any questions in the chat, because Maka will be reading those questions. Today's agenda, most people already have some context of the ASSP S2 framework, but we do spend some time covering that just to answer some of like the myths or the most pertinent questions we get from doing hundreds of sales calls or helping, you know, our hundreds of clients. So it's always good to have those really nailed. Everything on the assessment itself, and then a bit of an industry report that, like I said, Maka has done with NetNada, which we actually interviewed a lot of leaders, a lot of consultants, and a lot of companies, and we try to surface the biggest pain points that they face while tackling or preparing for climate reporting. Why is this insightful? Because what we see is a bit of a trend. So the problem that you are experiencing inside your own company might be translatable to a different company. So you can have a lot of peer-to-peer learning, or you can really kind of, once you learn something, you can deploy that at different companies very easily. So the big thing as well that we always say, in case it's not clear, there is a very simple table that describes who needs to report on mandatory reporting. One of the key things we want to focus on, and you can read the criteria of revenue, of employees, capital under management, is that it's 2 out of the 3 criteria that kind of trigger the threshold, right? Sort of questions that we have from companies. Okay, I have this many employees, but in this region, we always go in here and showcase the 2 out of 3. And at that point, you might drop a group as an example, or you might actually drop out of the mandatory reporting like capture today. As everyone knows, there's nuances to that. Supply chains, if your clients get captured, they might decide to activate or engage a supply chain. So you might get some requests. You won't have the same assurance or the ability as if you had to report yourself, but they might request of you certain things. One important thing as well, the trigger happens during the financial period that you are reporting. So even if you didn't start your reporting period as a group 1, 2, or 3 company, is by the time that you submit your financials to ASIC, in a sense that it triggers the threshold. So it's really important to think from a strategic point of sense with your client or your own company. Will I acquire a company halfway through the year? And that will like kind of increase your size of a company. Will I do a big hire? Would I actually like, you know, sell off part of my business and that will remove me from a group to the other one? So at that level, it's super important to have awareness of what is happening at the business perspective and not get closed in on just the sustainability, because you might not have oversight of what's happening. So again, to summarize, it is about what happens in the financial year that you're about to report. Doesn't matter if you triggered on the last month, you still get captured. If you have any questions on that, please let me know. It can get complex, and it's still nuances. Companies with, you know, different regions that operate in Australia or report in Australia but also report worldwide, it can get complicated. But as a blank statement, in the simplest of cases, this is how it kind of applies. All right. And also the other nuance is the engage threshold as well. Not a lot of, you know, people in school that I'm aware engage directly with those companies, but also to be aware in terms of triggering the mandatory reporting. The other thing that in this that gets talked about as well, people ask, when do I actually have to report? The report is your 16th of September, right? If you're reporting on a financial year. If you end the financial year in July, you have those months until September to kind of do your report submission. And then the same thing for March if it's calendar year. We always like to simplify the reason of this mandatory reporting and what it actually entails. And one quote that I don't have here is that reporting is actually easy. Your ambition level is what is difficult. So what I mean by that, you can always report that something wasn't material, that something wasn't needed, but putting that out as an organization, it's what's going to be challenging, especially when then you have like your executive level or like high level stakeholders involved. When they start wanting to benchmark and compare and seeing what the competition is doing, the challenges come from trying to do the best practice, not from the disclosure itself. One thing that we always try to communicate, which is a big shift in mentality in terms of sustainability, is that this is only climate related. right? And it's risk and opportunities. The emphasis on also those risk and opportunities that require different stakeholders to be involved, not just a sustainability person, and involves different skill sets that you might not have as a sustainability function. The other thing in the name,
And I'll jump in
yep,
there, Afonso, just to say something. The name of the framework, it refers to financial climate disclosures. So I think that word financial is a key word that makes it obvious that it's not only a sustainability job or sustainability team effort, but it includes other parts of the company as well.
exactly. And as you can say, as you can see here, the things included, things that affect your cash, your borrowing capacity, or your cost to borrow money as a company. So a very strong tie with finance. The second thing that I always want to point out is the primary users of this report. Primary users is the language in the legislation. I call it people, in a sense, is who's actually needs to access this report, and having that in mind while you write it and while you prepare it is super important, because you want to make sure that this information is digestible or of use for the people who actually need to access this report. This is a screenshot straight from the source, straight from the legislation, that I really recommend for you to open it and find it and read it. It's not that long, and having it saved on your drive and being able to like Control F and search for things while you are chatting with your stakeholders or with your consultant, whatever it might be, is super, super useful. So don't shy away from actually finding the legislation, downloading it, and spending a couple of minutes reading to that, or have it accessible, every time you have a question. I never thought I was going to find myself reading legislation, but here I am, and it's actually quite enjoyable, especially when you think all the consultations that went before it, the people involved, and SSP has done a fantastic job in trying to get where it's at, and it's actually quite pleasant to read and understand from the source what the aim is. Maka, I see the chat, a couple questions.
Yes. I'm just about to put the link to the framework so everyone can have access to it.
Perfect. The other thing as well is when everything was published, this nuance of climate reporting at the same time there was a sustainability reporting. The big key that I always mention with our clients in our community is that only the climate disclosure is mandatory. The sustainability is optional. You can decide to tackle both at once, but I just really, really want to make that clear that only these thresholds and requirements apply to SSB S2, and S1 it is voluntary, right? So super important, especially as we are used to the word sustainability to say it over and over again. Now there's a tweak that the climate is the mandatory and sustainability is the voluntary. Really good to have reiterate over and over again, so the language can start being consistent within an organization of the job that is being done. To the core thing as well, to bring the complexity or the breadth of work needed to be done. This is a very good snapshot straight from a presentation. I think it was from the ASSP S2 staff, one of the leads that they did at the greenhouse last year. There is 4 pillars, and we're very used to greenhouse gas accounting. The greenhouse gas accounting and the measuring of carbon emissions only fits within these metrics and targets. Everything else is connected, but has its own requirements. So tackling governance, things like remuneration of executives, doing risk analysis, doing strategy, and the financial impact of certain climate scenarios, it's really, really different from just measure your carbon emissions. Carbon emissions can relate then to the internal carbon price or your exposure if you want to like pursue carbon neutrality in different aspects. But there's a lot more to be done that now requires a lot more people to be involved to get this done. A good example, a risk kind of kickoff could be a 4-hour workshop, with 5, 6, 7 stakeholders from strategy, sales, procurement, and CFO to get it done. And before in the past to measure emissions, which is kind of the whole of climate sustainability, you could do it by yourself with just finance and accessing electricity invoices and a couple more things. Perfect. All right. The other thing, the big change is this assurance. And now I want to highlight, and again, this is straight from the source, that it is limited assurance, and assurance does not apply to everything that you need to disclose. And the other big emphasis is that just because there is no assurance on some of the things you have to report does not mean that you don't have to report it, right? So people look at this table and say, oh, this is none, so I don't need to do my transition plans or my risk management. That is incorrect. You still need to disclose it, but there needs to be there's no need to have assurance on it. The other thing is to try to engage, and we always do that with our clients, try to engage the auditor early in the process and try to do a dry run or a pre-assurance as you go through this. Because by being able to do so, you can build the systems and have the back and forth early in the process, not when you are a month away from your due date and you have to send your report to your designers and you're still figuring out if the thing that you have get assurance or not, right? So if you can do this early, invest whatever money is needed to get that pre-assurance on a dry run, which is like a kind of a training year. I highly recommend that. So if you're doing this internally and just picking maybe your scope 1 and scope 2 or doing your inventory yourself, try to put in the systems where you can bring your auditor and get pre-assurance, or like leverage your consultant expertise or a platform like NetNada that works with consultants directly to kind of build the systems, which makes assurance way easier. A good example is NetNada. You can keep all your documents while you're doing your governance and strategy, so they live in one place. Your consultant can contribute, and then you can export that to give to your auditor. Makes the process more seamless, and the fact that you have a system contributes to the fact that you have a method behind this process. Any questions on this, please do let me know. I'll send, of course, we'll send the slides. I'll be available online, but this is a good table to kind of have in the back of your pocket. And same thing, it's going to be a long journey. We're talking about that we are entering this first year. There's a decade worth of work ahead of us, of course, if legislation doesn't change. So it's definitely a matter of building systems and processes.
And Afonso, I'll jump in there. In terms of assurance, it's also important to know that it's not only about showing the results, for example, of scope 1 and 2, but showing all the process that led you to that result. So we've been talking with lots of auditors and clients that we're working with, and they want to see the whole track. They want to see how decisions were taken to get to that number. So it's important to have good processes in place from the beginning.
And that might relate, how you've captured that in the first place. One might be like straight from the invoice or an export from your ERP. Then which emission factors, if there was, months missing, how did you extrapolate or estimate all of these things in a methods document that highlights how you got to the final number. So that's the expectation to get your limited assurance on the numbers. Like I said, what needs to be reported is not just emissions. There's a lot of more things, and we'll deep dive in the different sessions on this. I'm putting here climate scenario analysis because it's one of the big things that most people have not done, and you need to access data models, you need to do some analysis, you need to bring stakeholders, you need to make decisions on how you quantify risks in the different climate scenarios. So it's something that you need to start looking ahead and preparing your team to be able to sit through those workshops and make those decisions. From March, the sessions in March until today, a lot of the biggest feedback that we kind of got is we want more examples, and we are incorporating those examples in our sessions. And examples might mean we're creating what we do with our clients or public reports that are already available to kind of consume and analyze. And I recommend you look through examples and we'll construct a database of all the reports that have some alignment with ASSP S2, so you can draw some inspiration with a very critical nuance. Remember that what you see in the final report is that the conclusion is just a result. The method behind it might live in a data pack, might live in a footnote, or might not exist at all in a public facing report, and it was just submitted to ASIC. So just be careful when you're trying to create expectations that even though the tables of a competitor or a client that you look up to or sustainable team that you know might not show the full picture. Might have elements that you can draw from, but the method behind it you wouldn't know unless you speak directly with those teams. Here, Maka has got a report from University of Sydney, which disclosed with some alignment to SSPS2. And it's really good to kind of go through that, how they tell the story, which tables they've included, and how they've showcased the process to get to what they disclosed. If you have time, I recommend accessing it, downloading it, and kind of skim to the parts that you are most interested in. Here we're showing the selection of physical risks and how that impacts University of Sydney. And like you said, there's lots of physical risks, and they've selected this as material for them. Maka, do you want to add anything in?
Yeah, I was gonna say maybe I'm a bit biased, but I think it's a great example because it's not necessarily the way it needs to be published or the way it needs to be done, but it's pretty organized in terms of each pillar. So it's good for inspiration. We can even send this as an example afterwards.
Yeah, perfect. Now, the core, and now I'll ask you another poll. Let me just see. Or Maka, can you launch the poll of if people have completed the readiness assessment?
Done. Just launched.
Perfect. So if you can complete that, that'll be fantastic. Right. So yeah, we sent this I think yesterday. And you're free to use it and resend again. And again, you can save and complete it more than once as you progress or as you get a bit more information from the companies that you're dealing with or internally when you get more information from stakeholders. So it could be a work in process, but it gives you a snapshot in that instance of where you are. It's also important that this readiness assessment only has, I believe, 16 questions. There is way more inside the legislation. It kind of tries to summarize them into different groupings to give you an idea if you are in the right situation. So we have kind of a 30-60 split where most of you haven't completed the assessment, but really, really good to know that some people are engaged and already completed it, and now they have that information with them. So really appreciate it.
And I'll just jump in there. For those ones that completed yesterday or the day before, you should have your results in your inbox.
Perfect. Thank you, Maka. So if you're doing this, you can do this by yourself with the information that you have available, in your systems or from the context of working, and that is fine. You can always, like I said, redo the assessment by bringing someone else in to do it with you once you have that buy-in. So you might have a same understanding of an area of the business in terms of like the risk aspect, and you do it by yourself. And then you might actually call your compliance person and say, hey, just double checking this, is this yes or no? And you update that number or that response. Ideally, once you finish, and this looks different for every company, and we'll touch more on this on the governance session in 2 weeks' time. But if you were to do this at a large enough company, after you've done the process of the readiness assessment and also the full disclosure, at least one person from every team or every function highlighted here should have been involved at some point. Of course, you might not have a legal and regulatory team, and this might, you might scrap that for your organization. But in general, this is how it's covered. This is what we're seeing with our clients. What is it and why is it important? I kind of cover what it is, a series of questions that are distributed into each pillar of the ASP S2. Why is it important? Because it allows you to then decide where initially you're going to spend your time. You might have really good governance, but really good at metrics and targets. And so you start that first. Or if you're trying to engage a consultant or a tool, you know where you need most help with. Instead of just trying to go to market and, hey, I need help with mentor reporting, you can now understand a bit more where you should spend some time uncovering the true level of readiness that you have at that point in time. So it gives you a bit of a tool to get going. Like I said, very straightforward. It's not out of this world. You're just going through the questions. It's yes, no, or in progress. Even if it's, you might answer yes, and that's fine, and then you later change that, or when you get audited, it wasn't yes. But like I said, it gives you an intuition of where you are. A good example is you measure your scope 3 emissions where relevant. You might say we measure 2 categories, and that's fine. And then you maybe include more categories into the future. That's completely fine. You might have some identification of risks, but once you do the workshop, you've expanded those risks and those changes, but it's okay. Really easy to understand, really easy to do, and shouldn't take you more than 10 minutes to do your first pass. This is a translation of what I was saying. From the readiness assessment, the underlying questions that will then need to go and get checked one by one are way more extensive. So don't take that score as like, I'm ready to disclose. Take that as like, I'm ready to investigate if I am ready to disclose.
Exactly. We try to summarize more than 150 requirements in 21 questions. So again, it's a snapshot of where you're standing. We know it's a yes and no questionnaire, and there's some processes that probably are meant to be in place in the future, but it's a good starting point to understand where you're standing at.
Perfect. What do the different levels mean? I won't spend much time in here, but it just, if you see something that is, it's like you're getting like that inactive state or that like explorative state, there is a lot of time, but also remember that this journey might take you 15, 18 months, right? So don't leave everything to the last minute just because there is an element of learning, then there's an element of like engaging someone external, then there's like the internal stakeholders, and then comes like the assurance path. And the more you can do ahead of time, the best. So don't see the sign of being a level 1 or level 2 as it's all doom and gloom, I won't be able to do this. Just think about like maybe it's time to kind of wake up or support this client more heavily because they don't have any systems in place to tackle this. Now Maka will kind of, so this is what part of what we use to create the research that kind of showcases where everyone is at in the real challenges of implementing climate disclosures. And I hope you find this useful so you can leverage those learnings to identify gaps in your own company or to help someone else. The second thing I want to mention is from the readiness assessment into a gap analysis, there's a gap in terms of like how much comprehensive data you get from that. Gap analysis will go to every requirement, where like a readiness assessment will just highlight those critical areas.
Exactly. And I can briefly go through this, Afonso, and then you pop in. So again, what we did during the research was 2 different things. On the one side, we did lots of interviews to understand more what professionals were struggling with, what were the challenges and opportunities they can assess. And then on the other side, we share the readiness assessment some of you have completed to lots of professionals from reporting entities to understand or to have an idea where they're standing at. And what we've seen, I'm not sure if you can see in the table down the graph, is that from all the pillars, the one that is the most established across all groups was the metrics and targets, and the one that was lagging way behind was the strategy one. We'll get into this in the next sections, in the next sessions, I'm sorry. But the idea to show you this is to see where group 1, group 2, and group 3 stands. As we can see, group 1, as we imagine, is the one that has the best performance. Then group 2 follows, and group 3. In terms of in which level they stand, group 1 stands in level 5, the ones that completed the readiness assessment, just for you to benchmark in case you have the results. Group 2 and 3, they both stand at level 4, which is an operational level. If you want to go into the details, we can send over the report and everything, but this was to give you an idea where you stand and where other companies, independently of their industry, but taking into account in which group they fall under, stand.
One thing to mention this as well is that what was, as you then will send the report over, looking at the quotes of the people involved in the interviews really kind of storytells some of the challenges that they were facing, and I really recommend you kind of draw inspiration from that. The other thing is to look that, this was self-reported, but also to understand that like strategy tends to be the least performing or the least ready on the fact that you prepare strategy last once you already know what's your baseline emissions, if who's going to be involved in your government, once you've done your risk assessment. With that being said, understanding the requirements of the strategy can show you the roadmap to go to the other pillars, because if you know what needs to be reported in terms of how you need to action as a business, allows you to better tackle the different pillars. But again, you only know how much money you need to invest on a mitigation of a physical risk once you've identified that risk, as an example. I really, really recommend you read the report or skim through parts of it, as it's really comprehensive, especially a part that is the conversational from the interviews that then has been categorized into different things that highlight things like technology implementation, budgeting, etc., into getting reporting done. The key areas to assess in the organization to kind of tackle this, and it's a bit of like a highlight. The data collection and reporting systems, it is key because having a system allows for better auditability, and having a system, whatever that looks like, it's a very good system in a driving spreadsheets, a software, whatever it might be, allows you to own that data. We see a lot of people in client consultant relationship to fall into the trap of doing everything outsourced without a good governance in that aspect. And then once you change reporting methodologies or once people leave, these systems fall apart. And it's really important to build a robust approach, as you would with like financial disclosures, into the business itself. The same thing is, you might be reporting to climate disclosures in Australia, SASBS2, but some of that information might be connected, a taxonomy way, into other frameworks. So making sure that you're having a system that highlights and compares those frameworks prevents you from doing double work. The other thing is that governance and leadership, and sometimes this is kind of convoluted with budget or resources, which means who in the organization is going to take part to get this job done. And it's very important to be critical on this, that while the sustainability person might be leading the charge, you will need to have time and meetings booked in calendars with other people across the organization. And also important that every time you have a meeting, every time you have an upskilling session, documenting those sessions, those meeting notes, those resources packs will be important, because you need to be able to audit that. But secondly, you need to report on the process on how you are upskilling certain members, being that a board, being that executive, being that management. Okay. So your business as usual now requires a bit extra effort in documentation and saving what you're doing, so you can build and showcase the method behind having a governance and upskilling and chain of command when things do happen. Finally, that risk, you might have, in some companies that we help don't have, but you might have already a risk matrix or a ERM for the business as a whole that doesn't have a climate lens on top. If you already have that, you just need to add climate and start adding risks to your register. If it's your first time doing it, we have a lot of templates and we have a lot of risk registers already ready to use, which we on the next sessions we can like give away as well. But you can use that to start those conversations. It doesn't have to be hard. You just need to put a bit of time to get this done. And when needed, speak with an expert where that has more oversight in a different area, or where you have a physical asset or a critical sector to give you new knowledge that you might not have access to. Finally, they don't want to see only the risks. They want this established as a process. So if you want to do this earlier, right, means that you can build the register and document that, and then you can spend 6 months saying how you've implemented some of the mitigation strategies. And might be, you know, repairs, might be extra analysis, might be budget for a consultant to run a better modeling, and all of those things gives you time to build that documentation. Again, most of the things about the process and the procedures, not just the disclosures. So the earlier you can do it, the earlier you can show how you implemented as part of business as usual. The step one is reviewing these current reporting practices. What are you doing? And we've kind of left an ask for you to draw some inspiration. You know, are you tracking the right data? Is it reliable? Are you meeting the current compliance standards? Hence the assessment. Understanding the requirements. So reading the documentation, jumping on a call with us, with your consultant, and actually, you know, opening the Pandora box of all the requirements. Evaluate the existing tools. So you might have already some policies, some people in charge. You might already have a sustainability committee, and you can just adapt that to meet the new requirements. So not everything needs to be fresh from the start. You might already do some good things, but just knowing the requirements will allow you to grab that and adapt it to what you need. And finally, engaging the key stakeholders. Once you uncover that the people that you need are not involved, doing it earlier, doing it at first at a high level, and then breaking it down. And I want to spend some time here, which is critical, which you'll hear if you ever go to a panel, which is it is hard to engage a board. Educating the board is challenging. I want you to see a board as an opportunity, not as a challenge, because board members will sit across organizations most often, and they'll have oversight across how other organizations are disclosing and the challenge they are facing. So every time you get the chance to meet with a board member, don't go from a point of they don't want to hear about it. Go from a point of they most likely are also seeing this on other boards. And if they haven't, this is the opportunity to transfer this knowledge from one organization into the other. So they're seeking this because of the responsibility and the personal liability involved with this. It can be a challenge, but I wanted to see it for you to see it as an opportunity once you actually involve these key stakeholders. We see this often. Thanks, Alice. We see this on and on again, and you know, I personally sit on a couple of boards, and it's exciting to be able to share this knowledge across organizations, and there's a lot of value in that. So some examples, and we are on to the final stretch. There's only a few slides left. Hopefully we'll finish before time, and you can finish your lunch or go for a big stretch and have a glass of water. Or at least I need a glass of water. And guys, these examples is just when you go through them, try to visualize this company and then compare it to yours, or compare it to a client that you're helping, or a peer that is trying to do this. But we kind of define a couple of states of how it looks to be at different levels in terms of readiness assessments. So current state has a sustainability lead. You know, it might be someone here on this call, but doesn't have a board or executive oversight. So you'll need to do a lot of stakeholder engagement. No risk management, metrics and targets. You might have been doing scope 1 and scope 2 for a while because you may be a professional service business. You don't have own any cars, and scope 2 comes directly from, you know, the two offices that you have. But suddenly you might find that data from scope 2 is only partially done, doesn't take into account location-based versus market-based emissions, and you haven't done anything on scope 3. Now, scope 3 is not mandatory to report, but you might do that because of on your risk matrices, you might highlight that a critical supplier has no action, is not transparent about their emissions, and that might show up in your risk register. And same thing, you might have an ESG policy or an ESG plan that touch a lot on like the social component, or maybe in like recycling or reduction of paper usage. We see a lot of that in like legal firms, but they never touched on climate impacts as a core business strategy. And like I said, you move from this, you might do a quick gap analysis, or you might do a full gap analysis with your consultant or with NetNada, whatever it might be, or in collaboration. And from that, you build the next steps. So it doesn't mean that the company wasn't doing anything. It is a low level, but you already have a sustainability person. That sustainability person is doing a readiness assessment. It is in webinars. They're seeking knowledge, and they're ready to kind of involve other people.
I think, sorry, Afonso, we have a great question from Anne there. If we're obliged to use location or market-based analysis, and you need to show both.
Yes. So you need, I believe you need to measure both, and you can report on one.
Exactly.
Right? But in the documentation for because it's going to be audited, you need to have both methods done for your scope 2. I'll get back to you on that, but I'm 99% sure. Because as per the greenhouse gas protocol, you're required to measure on both methods. On the reporting side, you can pick which one to report. Your auditor might need to see both. I won't go fully in depth into this example, but same thing. Try to compare yourself. This company already has a good example is like a net zero target, right? Has climate risks, but hasn't done three scenarios for the scenario analysis, which you have to, two out of the three, and hasn't linked expenditure to how you gonna tackle those risks in scenario analysis. So really advanced company, but by doing this exercise, they can actually see that they need to tweak their direction of sustainability or the next 6 months of work to keep on ticking those boxes for climate reporting. We kind of give this timeline as inspiration for our clients. A lot can be done if if the deadline is about to come, but a lot can be done in a long time as well if you have enough resources and capability, and you can might end up with a really, really strong foundation and process. Normally, these like the CapEx decisions, and I'm jumping all the way to the end, and product strategies happen in the later stages. What I mean by that is once you've done this deep work on understanding your company and the risks, you might come to the table and say, we need to redesign one of our core products, right? And that involves a whole, 1-year journey of redesigning packaging, different manufacturers, different logistics to kind of change that core aspect of your business that you want to mitigate or change the strategy. Same thing, you might not do your scenario analysis on day one. You might start with emissions, but you'll need to pre-plan at some point in time with enough time to change it and adapt it to get ready.
And yes, just to answer to Nicole's questions about the slides, we'll share them after the session.
Yeah. Finally, going to the end, and again, this is just on this very high level roadmap, but it has some key triggers for you to start thinking. And what I recommend is repetition of consuming this type of content, consuming this type of webinars, because it will make you very proficient in the language that is needed, and you can start drawing some parallels between your current activities and the legislation, and how far off are you for actually being deemed acceptable in a sense. This is what it looks like if you haven't done the assessment, and now we're just going all the way the home stretch. Very easy to do, and will be shared again by Maka. Really recommend that they should do this. I want to highlight as we go to the end that we want to be positioned here at NetNada as a source of knowledge. Of course, our core business is our software and our partnerships with consultants. But education is a key part of what we do, and the way that we educate is by having these webinars, by having these resources, and not having them behind paywall. So sustainability managers and consultants can build trust with us, and that they can actually start going without hesitation or needing to allocate budget on day one. We don't believe that $300,000 proposal to get this done is the way to go. The prices are dropping overseas in terms of compliance, and it will happen in Australia and will get commoditized. And your time and budget should be spent on impact, not just on ticking the boxes on reporting. So we try to give software, timelines, Excel spreadsheets, workbooks, access to information, and so forth. Same thing, we spend significant time building courses. We have a NetNada Academy where we have 4 courses up. They're on demand. You can go through them. We have carbon accounting, greenwashing, income reporting, in science-based targets, and I think also materiality. So a bunch of them. You might send this to different individuals. And we spent some significant time with Maka doing the report late last year, and we're looking to do one again in 12 months' time, so we can see how things progress over time. With 10 minutes to go, I just want to either for you to go about your day, but to ask any questions that you might have, maybe in terms of what the next sessions looks like, or which resources you like to access, or anything that you saw in there that you really want to get your hands on. And if not, if you want to have a time with me afterwards to discuss, to let me know. Maka, did I miss anything in that?
No, I don't think so. I think you cover most of it. And again, next session, just a heads up, would be diving also into examples.
Yeah. Once we now cover the different pillars, we'll bring examples of governance that has been published into the webinars. And we'll also, like I said, while we're doing that, build this data bank of reports that we saw with some alignment of ASSP as to. In the background, we're actually running an analysis or meta-analysis on public available reports. So hopefully in the future you can benchmark yourself and see how different industries are reporting on different things. Would you have an advice on some recent published reports? Like I said, Nicole, we're doing that at the moment. We'll share the UCID ones, but there's way more from Australia, but also overseas that have similar legislation requirements that have been doing maybe for a couple more years, and you can get inspiration from that. I think once we finish the Zoom, there's a quick feedback that kind of pops up. If you can answer any things that we want to do better, let me know. Like I said, next webinars, more people, more questions. We might keep it open like this or just do it webinar style. We'll let you know straight away. But bring your colleagues or your clients or your friends that want to learn more about this, and bring questions so we can answer them on a call and make this really interactive. Thank you so much, and I'll give you back 10 minutes of your time. Thanks, Maka, for helping out, and thanks everyone for joining us.
And see you in the next session.
Thank you.